Good afternoon, everybody. Here's the New York Open, New York session, currently 3:30 p.m. Just kind of looking for the silver bullet. We are kind of changing the ideas of trading just two pairs. I think I kind of locked off from EU and GU for a while. Just not lack of clarity on the larger time frames in recent weeks. I am bearish for the day, but we did kind of miss this opportunity during London session. We didn't get that clean bearish displacement that I was looking for. We took out this green line, which was equal highs during London session, but we're looking for displacement, which kind of got here, but it wasn't really anything too special. Maybe say here as well, but I just didn't like it. So I'm going to be looking for the silver bullet window instead. So we're going to scan through the pairs. I'm going to use this indicator to assist me, just to be quick about it. Do need to unmark. So, oh yeah, also, yes, last week, Saturday, I was meant to stream, but I had, what did I do? The whole day I was busy. Oh yeah, I did the gardening for like 3-4 hours, showered, etc., etc. So I forgot what I did during the morning, but I was very, excuse me, very busy. Okay, so with GU, I'm going to tag the ones that have taken some form of liquidity. All right, let's check on this one. Check out New York's high. Just check out this. Needs something cleaner and stronger. I was bearish for EU. Doesn't necessarily mean that G is bearish. So this is a displacement that I can get behind right here. Maybe we'll pull back into the area. A continuation. Because even though it had the event over here, it didn't immediately react. It kind of went down slowly. Got a displacement here, to be fair. Maybe it could have entered in here with... Also technically have this. So maybe something like this would have been would have been more valid. We'll have a look. I'm not feeling this that much, I'll be honest. But it's there, so I'll look out. So we took New York Cousins low. like it. Bearish. This would have been valid if price had gone up instantly. Pull back to this order block. Took out this low here. Also have this imbalance. We'll pull down into. If the daily time frame is bullish, it's consolidating. Disgusting. I hate those types of pairs. Ooh. Took this liquidity target, pulling back on the weekly time frame. Feel this as well. We should be bearish based off of that, but coming into this order block, the first time we had this small wick here, and within that bearishness, well, we've taken on London's high, displaced downwards, came up into it, and displaced downwards too. Okay. This one would have been nice. Here, we've only just taken the high. Our process is bullish, so this doesn't look good. Keep that medium. Ooh, hello. So definitely bearish. Taking up this liquidity here. Have this imbalance to fill. This will be the first target right here. Let's make that blue. It's consolidating right now though. Bearish. Bullishness works too, but I'll mainly be looking for how it looks. Okay, we've taken out, it's gone high. On the daily time frame, taking out equal highs actually. Almost. So now with this. See how it interacts with that order block. it's a bank holiday today. I just remembered. Well, at least in the UK. So okay. Keep my eyes on those. Don't really see much. The main purpose of this stream, anyway, is actually to study. To go over this, I think it's the Forex series. I'm gonna use a pen and paper to kind of make notes because I prefer writing it down and taking notes on the computer. I also want to implement from tomorrow 5 hours study sessions daily. Well, it's gonna be 10 hours, but on two different topics. In terms of trading, which is one of the topics, that will be 5 hours, which will also start from tomorrow. I don't know how much of that I'm going to stream because generally speaking, when I'm studying, it'll be a mixture of it will include me taking breaks. In terms of, I may take a break and then we continue that 5 hours, just because there's a lot of things for me to do. And tomorrow I have rehearsal, so I won't be able to start late.
So we have
This is it.
okay, you can see it created an image file. Price swing here to here. Briefly,
Let me get pen and paper. Okay, let's go.
introducing the market maker's business model. We're going to be looking at characteristics of a price swing, specifically dealing with time, price, and melding the two with support and resistance. price fractals and their role in analysis. And we're going to give you another homework assignment, price reactions. Okay, we are looking at a daily screen capture of the Euro USD pair, and this is a daily chart again. It's specifically highlighting a swing in price that we're going to be dealing with. It's going to be in the latter stages of this price swing, but it's not imperative that you understand what caused that swing lower at this juncture, because we will cover in greater detail all of these types of moves and how we can ferret that type of price action out in later episodes in this series. But for now, we're going to be dealing specifically with the fiber in this pair, how we can look for turning points and how we can anticipate certain characteristics and price action that repeat over and over and over again. And I promise you, when you are finished watching this episode, you're going to have a far greater understanding of what price action is like and how you can use it going forward in the new week of Forex trading. Okay, if you remember the last episode, I gave you some homework regarding the first week of July of 2013. Now, if you're watching this video and it's a number of years old, I apologize that you got to the party too late, but that's not my fault now, is it? But we're going to go over some details here so that we can at least digest the main focal points and how you can use it going forward. These are very generic concepts. They do not fall out of favor. They're not a fad gimmick indicator. These are essential core tenets to price action. And I promise you, if you apply these things, not only just to the fiber pair, but if you look at the cable and all the other majors and the exotics as well, you'll see these reoccurring themes that take place over and over again in price action. Now, the screen capture we're looking at here is a 15-minute basis, and we're going to digest a lot of information just in this small sample size of price data. But let's look at the second portion of study we gave as part of your assignment in the previous episode. Now we're looking at a price rally, okay? And in this price swing, we're going to be breaking this specific price swing down and how we can utilize generic concepts that go along with every facet of smart money trading. Now, again, this is a 15-minute time frame, but we're going to be applying smart money concepts to this time frame that are based on a higher time frame, which is where the institutional level traders and banking traders do the majority of their analysis. Okay, folks, we are looking at the fiber. Euro USD is the daily chart, and this is the top or the highest point of the price swing that we're going to be analyzing in our first sample size of price action. But I want you to keep your eye on what takes place in price. And as price starts to slide down, you'll start to see a pause in price action here. And you see this is the first bullish candle on this down leg. Now, if you look to the left over here, you'll see a small little consolidation in here. And you keep going over to the left, you'll see some old highs, a consolidation with some highs and bodies of candles, a short-term high here, and a turning point here, and a turning point here. Prior to that big leg up in price here, okay, this was the lowest low. As price rallied up, it made a high here as well, and then started to move lower in a very large price swing. It came down to a previous level of support. Now, the reason why I have this level here is if you look at the body and wicks of all the candles in here, you have the below the wick here, the wick essentially in here, the top of this candle's wick, this wick here, just stabbed it just a little bit, again, same here, the bodies of the candles here, okay, and if you look at really essentially it's the 127.70 level. And then price when it come down to that same price point again, the body of the candle stopped here. Granted, the wick of the candle traded through it just a little bit. Then we have the body of the candle here as well, with a small little wick as well. The body of the candle here comes right down to that same level, rallies and trades right through it one more time, and then starts to rally off. Price comes back down, makes this smaller short-term swing lower, okay? And I promise I'm taking you somewhere. I'm just going over the major price reactions and levels that you would be hunting in your future analysis in your demo account trading as you develop as a trader. When price bounced off this level, came right back down to the same point or consolidation in here, and as price come down to that same price level, notice we failed to get to that same old low or support level 127.70. Price found a new level, consolidated, and moved out of that consolidation and started to trade higher. Now this price swing in here, okay, is the basis of this price rally here. Now as price starts to move lower, we would be looking for areas where we would reasonably expect to see price to stall. Price bounced here. Now just for illustrative purposes, let's just use the very low of the wick here. And I'm just going to double check the candle, make sure I am indeed on the low. The low is 130.58, and we're going to move our level right to that point. Now you can see this swing high. Remember we talked about in the first episode, a swing high is a high that has a lower high on either side of it. Okay. We have a nice level of support resistance in here. Same thing here. Nice support resistance. Nice support resistance. Nice support resistance. Again, same here. Okay, we have a nice swing high as well. So this price point, while it is an off even number, it could be very easily calibrated to 130.60 level, okay, which I think is a much more reasonable level to move this line to. And what that means is the institutions like to use large round numbers. They're not so finicky in terms of trying to get like the 8s and the 4s and the 3s and such in terms of filling. They'll just use the round numbers to get their orders off on. And I'm just going to key that in here manually so you can see. So I'm using 130.60 as a round number. You can see it gets right to that high here as well. And again, it doesn't really essentially change too much over here, but when we get onto a smaller time frame, it might be more useful to us as we see the levels more closely calibrated to a smaller round number. Now, when price gives a bullish candle here, this by itself indicates a lot of different things. And this episode will not be long enough to go into the information that these types of candles create, but I promise we're going to delve into those things in later episodes. But for now, we're going to be giving a lot of generic, broad ideas about how smart money operates in the marketplace and how you can more or less follow their coattails and try to hopefully see a profitable swing in your favor. Now, as price continues to move lower, okay, this same bullish candle, okay, when we cause this bounce in here, something about this level at 130.60 was a catalyst. Okay, now institutional level trading, again, revolves around round numbers. So a lot of questions I get through email, and if I'm haunting a particular forum or such, they will invariably ask me, hey, ICT, can we get a little bit more understanding of how it is that you arrive at what would be considered your key support resistance levels? And what do you mean by institutional levels when you say price is going to come down to this institutional level, or you expect to see a particular level swept? Okay, I'm going to cover that in this module so that way you have a greater understanding, so that way not only will you understand my videos when I do reviews and trade recaps, what I'm referring to, but you're also going to see how to look for it in your own charts. And you'll understand what it is specifically that price action is doing and why. So price bounces here, okay, at an old swing high. Bounces here. Now, price trades through it, but if price ever comes back at that same level, that is a potential area of a setup. Okay, so we could look for a selling opportunity should price get to that same level again in the future. And you can see price trades right up to this level here. The high of this candle comes right in at 130.59. So we fell 1 pip short of the actual round number, but you'll see when we go down to a smaller time frame, it really doesn't make that much of a difference because there's a lot of other factors that will be more beneficial to us. So now we have the next candle here. It sweeps up through it and then trades lower and closes on almost the low of the candle. Price trades right back up into a bullish candle here, right into our 130.60. Now the high, again, on this candle comes in at 130.73. So we're 13 pips off. So again, we're looking at a daily chart. So if we're going to be just off by 13 pips and we're looking at the daily ranges, again, these are all full daily bars. That's not bad in terms of highlighting areas of potential setups or bounces. And that's what your framework is going
to do a little bit of research real quick. So I kind of know the answer to these, but it's just a good starting point. So what I'm basically trying to find out is one, who even publicized that institutions use whole numbers. Let me just make it like this. Hold on. There you go. Who even made it that? Oh, I see. Who even made it that institutions are the ones that use whole numbers? And then I want to know how people know this. Maybe it's just leaked information, but more specifically in terms of how they operate and why they operate the way they do. That's what I'm trying to figure out. tell you where I'm getting at in a bit. So when you type it in, it says supply and demand. And what website is this? Hmm. Mm. It's a bit very vague, the answers it's giving me. And it's not exactly the correct answers, which is interesting. He's mentioned some of these names. Who wrote this? He went to work, factoring marketing. So he doesn't have that much knowledge in finance itself, which is more the writing side. See, this you gotta be careful. Look, this guy right here is the guy who wrote about what moves the market, but he has no experience in the market based on his bio. Obviously, I don't know. This is his post on LinkedIn a year ago, talking about him writing. I don't care about the fact that he has a, what was it, 2018? That was the, yeah. I don't think he is a graduate from English Lit, but it's the concept of the fact that even after that, he did gigs, writing. But how can you, what are you writing about when you're not in the market? I can't take advice from somebody like this, personally. This is just all speculative. And then not only this, that then is linked to, where was it? What moves price? Wait, they've changed it. They're on to me. What's the website called? Currency transfer. What moves price and forex? See, they've even changed the, yo. Look at this. So I typed in what moves price and forex 5 minutes ago. They give me this article from this guy saying that forex prices are driven entirely by supply and demand. When more buyers want a currency than there are sellers, the price rises. When sellers outnumber buyers, the price falls, which is linked currency transfer +2. To be fair, let's say +2. Oops, I was actually meant to click on it. Hold on. Okay, but then I type it in again, same thing. Are fundamentally driven by supply and demand, which same thing, but they just find an article that proves their point rather than actually look for the answer. So just because it's AI, you gotta be careful. I feel like it's still manipulative. Interesting. Okay. Well, what? Hmm. This is hilarious. But it's some key names I want to research later. Okay. I believe on this. I've seen people do it in unregulated markets. So the concept that people would do it in regulated markets makes sense. I muted this. Right.
We're trying to keep up with the next guy learning my concepts. That is not what you're trying to do in the beginning. What you're trying to do is build a fundamental base of price action, and we're going to build and expound on that each episode. And I promise by the end of the 8th episode, you're going to have a wicked understanding of price action, and you're going to be blowing your socks off. And not only will you be impressing yourself as you go in deeper study of price action, but you're going to start seeing by studying the other quote-unquote street money or less informed traders that invariably talk on forums, or you see them even in so-called expert circles. They really have no idea what they're talking about. Okay, so again, really go through this video module a lot. Not just one sweep isn't going to do it. You're going to be going through this a couple different times, and there's a lot of things that's going to go right over your head the first few times. But I promise by taking notes, yes, taking notes. Remember, you're supposed to be having a notepad next to you as you watch these videos, because when we discuss a specific topic, you're going to be wanting to know the details or specifics around that concept, so that it's not that you have to go back to this video and see it, or which video it was that specifically talked about this concept or that. You'll know where to get the information from, okay, and how to apply it without spending too much time chasing after where it is in the fundamental concept behind it all. So again, we have that 130.60 level in here. Okay, this daily candle trades up into it, squeeze through about 13 pips, and then the next candle, we have a very nice reaction here, trading lower. Now again, all we're looking at is how price is moving on the daily chart. So as we see price moving lower, we just keyed off of a nice price level here. Now as price is trading lower, now where would we reasonably expect price to trade back down to if it continues at all? Because there's no guarantee that price is going to continue lower, but because we have seen price trade off such a nice move lower, we broke through old highs, so now what we're going to be looking for, old lows. They are found here. And if price trades through that, where do we go next? These lows. And if price was to trade through these, where would we go next?
Those lows.
These lows. Okay? And that's what you're looking for. Again, a consistently highly successful trader does majority of his analysis on the higher time frames. Okay, you don't have to spend so much time on the monthly charts, and you don't have to spend so much time on the weekly charts, but it's advisable. But certainly spend a lot of time on your daily, your 4-hour, and 1 hour only if you can't really discern anything. Like right now, if you need to be trading, short-term day trading, that's when you spend a whole lot of time on your hourly. But really focus on your 4-hour and daily, because that's where the banks, the institutional level traders, and the smart guys like you're going to try to be in the future by applying these concepts. You're going to be spending the majority of your time doing your analysis on these time frames. Now, it flies in the face of what you're commonly referred to as this is too slow. Well, that's fine. That's exactly what you want, because you're going to learn later on in this episode, slow is good, okay? And one of the central tenets to understanding what you should be doing as a trader is understanding what traders are hopefully trying to capitalize on, and that's price movement. Now, I'll give you a quick question before we go any further. Can you, as a retail trader, move the market?
No.
No, you can't. Can we, as a group of retail traders, move the market?
I don't
Sure,
believe so.
on a short-term basis, but not very much. And we're talking about a minor little blip in price action. So who is it that moves price? Who can take price from these levels here all the way down here?
Large.
They are the large dominant players, or what is commonly referred to as the smart money. Same entity
The
takes
reason why I
price from
say
these levels.
no is because you would have to come to the agreement that everybody that is moving the market is acting in one nature. Because and it's predictable. Once you have those two things, then you can say retail moved the market, because the one mind aspect means that it's a decision, not randomness. Because if it's a coincidence that multiple different people come up with the same idea and execute the same trade or execute the same idea, they have the idea, then they execute it. Well, if it's a coincidence that happens, then you can never predict it. And the reason being is because people are going to have both opinions both ways. Like, there could be some drama. Someone could be a celebrity could have cheated on their partner. You would have two people backing each person's side. There may be one more popular than the other, but you won't really know. And if it's a random thing where in the markets there's buyers and sellers, we don't know if people are going to be thinking as a buyer in a situation or a sell. And it takes away the decision aspect of retail traders moving the market. I cannot then say retail traders move the market, because to move the market, you have to have, in my opinion, intent and control. Retail traders don't have either, because every retail trader has a different idea. Number one. Number two, that changes that's the intent side. Control is that every single retail trader has their own right to execute the idea and have an idea. Just having an idea is not enough. The idea executed is the power, is the place where price gets moved. But if nobody executes and everybody thinks the same thing, then nothing happens. We've seen that happen in this realm multiple times, where people have the same idea and nothing gets done because nobody did anything. So yeah, I have a notepad here, so you won't be able to see. I don't really stream with a camera anymore, just because it's distracting and it's a lot of prep work. I'm not really trying to show my face anyway. Nevertheless, we're basically making note of the daily chart. So I'm making note of the round numbers. I knew this already. Most of the stuff I already know, but sometimes it's just good to go over. Plus, this is a new series I haven't really watched before, so I'm just making notes anyway. So we're at the 1277 level, which is this psychological level down here, and he was basically making a point that I forgot how he established it initially, but he was making a point that when you take it back
up to here,
you can see how it is respected with some room for error. So it's a daily chart. Cool. Let's go.
and vice versa from this high down to this low, and this low to these highs, this high down to these lows. So the question begs is this: if you're not spending time trying to learn what it is that they do, okay, on a larger time frames, aren't you really shooting in the dark? I mean, you're really not giving yourself any real measurable chance. You're stacking the odds against yourself if you're looking at time frames less than 60 minutes all the time, because there's no neon sign jumping out on your chart saying, okay, this is a buy. Now, you may believe that's the case, but I can assure you that is not how it works. If you spend the time in the exercises that we're going to be covering in this episode, really roll your sleeves up, get yourself some time in front of the charts, and spend some study. Not looking for trades. You want to be studying what price has done in the past, why it's behaved that way, and I promise you will activate your reticular activating system, where it basically tells you every time you see something that you've grown accustomed to seeing, your brain will immediately allow that to come into your mind, and you'll receive it, and you'll say, okay, the last time I saw this happen, this is what transpired as a later effect. If you don't first train your mind to see what it is that price has done in the past, and it repeats over and over and over again, invariably you're going to be a better trader because of it. Now, I'm not saying better trader is consistently profitable. That's nothing that I can promise. But I can promise that you have a much greater grasp on what price action is doing, so then you can start applying some concepts, even from your own repertoire or your toolbox, that will assist you in making trade decisions. Now, again, I'm not advocating you use real money. Learn to develop into the trader that you aspire to be with these ideas to stimulate your development. Again, I don't want the credit for your success, and I don't want the credit for your losses either. So please be responsible with the information I'm presenting with you in these modules, because again, I'm not acting as an advisor, but I'm just showing you the things that I do in my own trading and what I've done for almost 2 decades, and I promise if you spend some time with it, you're going to see some value in it. So we have this 130.60 level in here, okay, and price starts to trade off. And as price moves lower, again, we're eyeballing these levels in here. Now, as price starts to move into these lows, we could reasonably expect to see pauses, bounces, but you can see there's a very large acceleration moving lower. Price gets a small little bounce in here, this little bullish candle, Okay, and that's on the heels of these lows here. Okay, but the price eventually trades all the way down right into this 127.70 level again, which is that level we have over here, and these lows here, and you can see how price reacts there. Now, there really isn't any magic to this. It's simply understanding what the institutions have done in the past at that particular level, and when price comes back down to it, we anticipate the same reaction or similar reaction in deference to what price is going to do next. We don't have a crystal ball. We don't know for sure what's going to happen. There's no guarantee that it's going to always transpire like this. That's why we use stop loss orders, and we use sound, prudent risk management models, where it gives us a shield. Okay, we're not expecting perfection. We're not expecting to know every single swing in the marketplace. We're not expecting to not be stopped out in trades. We're expecting to be more consistently positive than negative, and permitting ourselves to have that occasional and maybe even string of incorrect, I'll use that term for now because I don't want to talk in terms of profitability yet, in terms of correctness in our analysis. Okay, that's where you want to be focused on now. You want to be looking at, are you doing the same thing consistently over and over again with a large sample size of data that supports this theory. Okay, and we're going to give you a whole lot of things to look at that you can study on your own, because I'll ask you this also. If you're new to trading and you have your charts open, maybe you're at work, or maybe you come home from work and it's over the table, dinner table, you got your laptop or iPad, whatever it is you may be using to look at charts, and you're looking at these price charts and you're staring at it like a deer in headlights, trying to figure out what it is that you should be seeing. A lot of that fog is going to be lifted. Okay, it won't be completely eradicated, but it's going to be lifted in this episode. Okay, so you can clearly see just by this simple approach of looking at the higher time frame charts here, look at the nice price moves here from this same level we just highlighted here. Okay, if we look in terms of pips, now again, we're not expecting to get the entire move, guys, so please don't build that as an expectation on your part. But if you look at that move from that level down to this level, that's 292 pips. And that's pretty respectable. Now again, these are all daily candles, so it's less than a month. So if you break that down, it's pretty, it's a pretty good month. I know you're probably scratching your head, wait a minute, I'm not making 500 pips a week. No, I don't shoot for those types of levels in terms of pips, because there's no guarantee you're going to get that high. Two, it puts an unrealistic level of expectation as a trader should not be doing as they're developing. Even a seasoned pro, and I'm not going to, well, yeah, I guess I am. I could guess I would be able to be classified as a seasoned pro. I mean, almost 2 decades of doing it. Not specifically Forex, but trading. I think I would fall in the category as a seasoned pro, and I don't have these high level expectations that new traders are expecting. And I consider myself pretty avid in terms of price action understanding, and I have a good feel what price is trying to do on any market, any time frame. But it doesn't mean I'm in there every single day, 15 times a day, because the kind of question is okay, once you understand it and you understand more and more and more of it, then you can start trading more in terms of leverage, and you can take more trades, and therefore you're going to be super rich, and you're going to be the next George Soros. And that's not what happens, okay? Because what happens is you eventually grow comfortable with the fact that you don't have to be in front of the charts all the time. Life is out there, and I like being a part of it. So don't think because you're learning all these concepts that you should be spending even more time trading. In fact, I'm hopefully going to take your hand away from the keyboard and the mouse so you don't trade all the time, and you're just going to be looking for these really cherry setups, and that'll allow you to go to the market and pull out when it's highly stacked in your favor, versus what majority of you guys do as new traders. You turn the chart on simply because you sat down after work. It's time to make money. It doesn't work like that, guys. Okay, so again, this level here, something we could arrive at simply based on old highs and old lows, and again, using the daily time frame, okay? And there's a whole lot of other things that we're going to talk about, not in this module, but when we get down to actually understanding how it is that we take trades and entries and such, we're going to get in here and start breaking down these little points of which you can use to fine-tune a specific entry point and reasonable expectations and where and why price is going to bounce and move, extrapolate price surges and drops, and like this here. Okay, we just covered this one here. We're not going to beat it to death because we are going to be breaking down this little section of price action. But moving ahead, you can see price does have a very, very aggressive move higher, and then we start to consolidate. Look at the wicks. Okay, see the wicks? They're all stabbing through that 30-60 level, but the bodies are having a hard time making any measurable move lower. You see that? Now watch what happens. This same level now, okay, becomes an inversion level where it was support here, it inverts, now it's changed its role, and now it acts as resistance. And as price comes right through it again here, now we're on the northern side of it again, so now it resumes its role of what? Support, okay? So this tells you that the institutions are doing some pretty significant dealings around this level here, okay? So as price moves away from here, and if you see any kind of type of retracement here, this is when you can start to hunt a buying opportunity, because now we can trust with a certain measure of expectation that this is now going to potentially hold price above that 130.60 level. The price rally up here, this level here becomes sensitive because this old low here, which is these old highs here, okay? So again, we're looking and studying, not just, okay, well, I'm going to grab this high and this low, and if you just look at these highs, and it's this low and this high, until price gets these levels, that's a long time you're waiting for. You're gonna be doing a whole lot of trading. So what are you gonna do? You're gonna chase systems. You're gonna chase something that is more active. Okay, and that's problematic for a new trader because it's not about how many trades you take, it's the quality of the trades that you take. Okay, so now when price moves away from this level here, we can start looking for other specific price points that will aid us in support resistance. Now, these old highs here, price trades right up into them again, okay, and then trades off. Now, again, it's not about capturing every single major high and low. You just want trading opportunities. Just in this price swing here is 191 pips. Just this, 191 pips, and we're talking about a week's worth of trading. And then price does what? It snaps off again. What did this rally take action off of? See this high here? See this swing low in here? You have a lot of body candles, and then boom, right here. And you see price rally up. Price punches through this high and this high and gives us a reaction here and then trades back into this candle as well. We're going to be looking at two sections of this market, and we're going to be looking at this move here, and we're going to be looking at this move down here. So we're going to be looking at a trending environment, which is what this is here, and a potential reversal area, and we're going to be looking at this specific price sample here, and it's a little bit different characteristic of this that will not be so notable here. Okay, but we'll talk about it in greater detail in other episodes. But for now, let's take a look at this section in price action first. Okay, we are in that small little section of price, and what I'm going to do is I'm just going to pull up this area here, as you can see. Now, the first episode I talked about looking at.
For that, let me just make a note of something. So I'm basically writing down. Was that the 366 level? 3060, that's it. Oh, give me a second. So just responding to my brother. I didn't realize I didn't text him back.
Down here. So we're going to be looking at a trending environment, which is what this is here, and a potential reversal area. And we're going to be looking at this specific price sample here. And it's a little bit different characteristic of this that will not be so notable here. Okay, but we'll talk about it in greater detail in other episodes. But for now, let's take a look at this section in price action first. Okay, we are in that small little section of price. And what I'm going to do is I'm just going to pull up this area here, as you can see. Now, the first episode I talked about looking at the 1st of July to about the 9th of July, okay? And I wanted you to study what price was doing in all of this sample size of data. Now, again, we were talking about that section. This is where price was moving down, trading lower, lower, lower aggressively, again, off that 130.60 level that we noted. And again, I'm just going to add that level back here so you can see it. Okay, and this is that daily move where it traded right up into it and then had a bearish move lower. Okay, and then we started to move lower and lower and lower. Because we study the higher time frame, we can discern where the institutions and large traders are more apt to muscle, if you will, the price of a particular market one direction or the other. You as a retail trader, me as a retail trader, I can't move the market. I have to rely on the entities that are large enough that their orders and their buying and selling pull price out of the current status that it's at right now. For instance, when price was trading around that 130.60 level in here, let me fix this level here. When it's trading here, large institutions come in and they put big orders through, okay? But they don't put all of their orders in at one time. They have to work that order in because they're not like you and I where we're hoping to trade, 100,000 of euro, okay? They're not worrying about making $10 a pip. They're moving massive blocks of price orders that hopefully can be filled before price starts to move away. So as price moves into these levels, they're putting small pieces in at a time. Okay, why do they do that? What is it specifically that they're trying to avoid? Much like anybody else, they want to get a good price. But because they're smart money and they're on an institutional level, they are huge. Okay, for instance, um, let's take a step back conceptually. Looking at the market, okay, the Forex market, you'll end up as a new trader, okay, we have a very childlike perspective of this is like a video game, or this is an adventure, okay, or this is going to be very fun. This is going to be my new hobby. And we'll stick with the childlike theme. Okay, so this represents Forex. Looks inviting, doesn't it? You just want to jump in there and have a splash. But we're going to use this analogy, this small little pool here, that will represent the market. Okay.
I think I know where he's going, but let me just quickly write this down. So writing down that institutions put small pieces of their order in the market. I need to actually add that. In the market, though they are huge in that if they were to go all in, they would affect how prices move. So he did say to analyze it. This is from the 30, 60 level, essentially on a daily time frame, just the idea of price moving down from it. So I need to stop saying so much. Anyway, the thing I noticed is that in each of the moves downwards, there is somewhere, some way, huge displacements, excuse me, involved. One, argue 2, 3, 1 against us. So 3, 4, 1, 2, 3, and 4 against, maybe 5, 2 against, sorry. Bam, bam, bam. So while we're in this bearish move, you can even start from here. Bam. This was the first sign. Bam. Price came all the way back up to this area. Bam. Price came all the way back up to this area. Bam. Bam, bam. So now I want to study the pushbacks, but let's go through his example. He's probably going to talk to us about the displacements itself. The elephant comes in, but let's see.
The arena is the pool, okay, and price is the water. We can get in that pool and we can make little splashes around, okay, as retail. But that water will not be displaced by retail traders. We'll make small little minor little blips, okay, like you see here, okay? But when smart money gets involved, okay, they're like that elephant in the room. You can't really hide him. He's standing right there in front of you. Okay, imagine if that same elephant now decides it wants to join the pool party. What are you going to have? You're going to have a large displacement of water. They cannot hide it, okay? They are invariably going to be noticed if you understand their footprints, okay? As price trades up to this level at 130.60 level, it's trading off. It trades through it again and then trades off. It trades through it again and then trades off. See, this is the first telltale sign that somebody on a big level, okay, we don't need to know who specifically, but we just know that somebody on a larger perspective is now getting involved with this market. And what are they doing? They're shorting. Okay, they're becoming sellers. At a level now that we discerned on the daily chart that this is probably going to be an area that's sensitive. The price comes up, stops right on a dime here, then trades off a little bit. Now, what's happening is they'll put orders in, they'll sell a little bit, and sell a little bit, and sell, 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 sell. And eventually, when they know they can put their last bit of, their trade on, okay, they will just stack their orders all in this level, and it may be a little bit above it, a little bit below it, but they're generally trying to get an average price around that 130.60 level. Okay, it may be that 130.50 level as well, because it's a half of a full figure, mid-figure level, so that may be the price level they're actually working to. But as price moves above, okay, you can see how every time it does this around that level, just look at this whole price action in here. You can see that this is a failure to run above this old high. Okay, now when we see price trade off, I guess, and it fills in all of that price decline like it does here. Okay, this is smart money trying to get that same price action. They put a large block on here. Now their liquidity is limited to whatever's there at the time. So if there isn't a large pool of buyers here, okay, there will be a issue for them to get the rest of their orders off. So what they'll do is they'll put small, and again, to us it would be large, but to them it's small blocks to get their overall average price of their net short position that they want to be establishing. Once it's established, okay, price will do what? Drop, because there will not be any more buyers for the other side of their trade. Okay, there's no more buyers. So what's going to happen is it's going to create a heaviness in the marketplace. So now the net selling will take a larger toll on price action. And as price starts to trade back down, these every little rally in here, okay, will be new selling opportunities. Now, many times you'll see traders see these rallies here and they'll chase that. How many times have you done that? See this type of thing here. Look at it, man, it's rallying up. I better chase it. Let me buy this because it's probably going to go through these levels here. It's going to go through these levels. It's probably going to keep on going, and maybe we'll see 130, 150. Or whatever else the guy in the forums or on the internet was talking about how it's going to go there because their cool little indicator said so. It has nothing to do with any of that. okay? If you start looking at how price is now moving lower, okay, you can see they're rapidly moving price to a specific price point. Where? Remember that 127.70 level on the daily chart that we looked at? Let's put that in right here. And I'm sorry if I'm boring you guys because, you know, this isn't sexy. And it wasn't sexy the first time I learned all this stuff either. In fact, I ignored it. I said this is so boring. It has nothing to do with making money. I want to get in and get out. Okay. Had I understood what I understand now, okay, and if you're struggling with this right now, if you're falling asleep, try to really get this point. If you can't grasp this concept here, wild success will evade you. Consistent levels of success will evade you. Sure, you might have moments of profitability where you have a string of winners, but anybody can do that. If you have a career of consistency, then now you're talking, okay? Because you're going to be doing what? You're not expecting to be smart, okay? Does it take a certain level of understanding? Certainly, but you're not trying to be a genius, okay? I'm not a market maven. I'm not in here, understanding every detail or fundamental driving force behind all these moves, but I understand by looking at price action, what's the psychology behind it all? And that's what we're dealing with in this episode, because this is one of those central market tenets that just is glossed over in text. Oh, well, you have to understand market structure. You have to understand market dynamics, internal pinnings of the market, okay? And that was the last thing, the internal pinnings of the market. That was an expression I learned from Larry Williams. And the term, it intrigued me.
There's that name,
but
by
he
the way.
didn't really go into great detail as to what the hell he was talking about until you spend a lot more time and money in his work. And I'm not sure if that was planned because he is an educator by trade, but he is a successful trader as well. So, one could argue, is it really meant to be learned all in one time? Who knows? I don't know. But all I know is if you spend time understanding these ideas that we're expressing here, you will be far, far greater in terms of a price action trader than you learn in books or on your own, because you just don't learn this stuff, okay, just by turning on the computer and going to the internet, unless you're watching my channel. Plug. So anyway, let's get back to what we're looking at specifically in here. Now, the first decline here and trades right back up into this level. Note that this price drop takes out a major, well, not major, but a significant swing here as we trade into that level. Now again, the main focal point is the higher time frame key level, that 130.60 level. Okay, we don't go to the lower time frames hunting a pattern or a signal or a setup and then try to find a level that supports that notion. That's not how we're doing this. Okay, you start on the higher time frame chart and you find key levels, okay, that are obvious, because if they're obvious, that means it takes all the guesswork out. Now, it may take some patience on your part in books or on your own, because you just don't learn this stuff, okay, just by turning on the computer and going to the internet, unless you're watching my channel. Plug. So anyway, let's get back to what we're looking at specifically in here. Now, the first decline here and trades right back up into this level. Note that this price drop takes out a major, well, not major, but a significant swing here as we trade into that level. Now again, the main focal point is the higher time frame key level, that 130.60 level. Okay, we don't go to the lower time frames hunting a pattern or a signal or a setup and then try to find a level that supports that notion. That's not how we're doing this. Okay, you start on the higher time frame chart and you find key levels, okay, that are obvious, because if they're obvious, that means it takes all the guesswork out. Now, it may take some patience on your part. That dreaded word P, patience. The long and short of this is you're going to need to exercise a whole lot of patience, because until price gets to these higher time frame key levels, you aren't going to see institutional sponsorship behind the moves, okay, unless you find a move like we're describing here, where we have a level noted on a higher time frame and another level based on that same time frame that is a higher level support level. So between these two levels here, we don't have a whole lot in terms of higher time frame support lines that would really expect to see price turn around on a dime. Okay, now we do have intermediate term swing lows here, okay, and we have short term swing lows here that cause pauses in the marketplace. Okay, but we're not focusing on the short term. We're trying to train our eye to see the intermediate term price swings. Okay, so now let's take a closer look as to what's taking place in here. We're going to introduce the time of day, and what we're going to do is we're just going to highlight with some arrows. Okay, we're going to look at specific little areas where price made significant price highs and lows. Okay, and what I'm doing is, because on the higher time frame we had already established a bearish tone to the market. In other words, we were expecting this level to be sensitive and that we would expect to see price moving lower. Okay, and where would it be moving lower towards? This level down here, because it would be the next higher level time frame support level. So we have a whole lot of range to work between. Okay, and this gets to the central tenet of directional buys, because a lot of traders, it just escapes them, and it's simply because they're expecting it to be again, real easy to determine because just look at the chart. Well, you have to go and spend some time on a higher time frame because that's what it's going to tell you. So we have a range of 291 pips between the high here and the low here, these two higher time frame levels. So 290 pips. Now watch what happens. We're going to be looking at, oops, let me get the rest of my highs in here. And okay, so we have highs represented here. Okay, and we're going to be looking for things that are generically repeating. Okay, so we're going to introduce also support and resistance. But before we do that, we have to break our chart down into time and day of the week. Now the double lines represent Sunday, so this vertical line to this vertical line represents
Friday,
trading for that week on a Monday. From this vertical line to this vertical line represents Tuesday. This vertical line to this vertical line is Wednesday, and this is Thursday trading, and then Friday. Then we go into a new week on Sunday. On your notepad, write this very, very big, okay, and underline it. In bearish market environments, okay, what I mean by bearish market environments, if the daily chart is poised to move lower, you have a 70% chance of seeing the high of the week form by Tuesday's London Open.
How do you word it?
What I mean by bearish market environments, if the daily chart is poised to move lower, your notepad, write this very, very big, okay, and underline it. In bearish market environments, okay, what I mean by bearish market environments, if the daily chart is poised to move lower, you have a 70% chance of seeing the high of the week form by Tuesday's London Open. Okay, so if you have a bearish expectation in the marketplace, expect the high of the week to form by Tuesday's London Open. Now, sometimes you may get that weird, crazy move that will take out Tuesday's high with Wednesday, and that may be because of a major market, moving indicator or report that comes out. And that's going to be that one wild card event where, sure, you may have been in a profitable trade, and if you didn't take any profits as you went down going into Wednesday's trading before it trades and runs your stop or runs you out of your position, they're going to happen. And I have not been able to find a way to avoid those types of things. Okay, but by far and large, if you look at when markets are trading softer and moving lower based on the higher time frame, again, we're specifically dealing with the daily chart here.
Let me have a quick check on that. Obviously, I would have to go back in time to get a longer term idea, but daily time frame. I'm bearish Tuesday London session. So essentially, this is the high of the week. It'll be hard to see. I'll have to see it maybe in an existing market. Okay, so yesterday was bearish. Well, no, it has to be over a week. So let's look for big black candle. It's bullish. I'll assume it's the same in the bullish market. The low would be formed 70% time, 70% of the time by Tuesday London. So this is last week. And then this is the end of last week. The low is formed up, to be fair, on the Sunday. Tuesday, end of Tuesday was the low, West point. So it should be going up high from there, which it did. Bullish. Just mark out. So lowest from Monday 3. No. Technically Wednesday 4. That's 50% so far. Bullish. True. 203. Okay, this one's bullish. Tuesday, not London, but 3 p.m. would be New York. So London's low would be around by here. They actually took out that low of the week and used that to go up. Okay.
Okay, but you can also move down to the 4-hour, but really only if it's really not clear to you on the daily. So again, the daily or the 4-hour, that's where your higher time frame key support resistance and bias is determined from, because we're looking at these higher level time frame support resistance levels that the institutional traders are going to be keying off of. Okay, so again, with the notion that this market's moving lower, okay, we would reasonably expect to see the high of the week form on Tuesday's London Open or Wednesday's London Open at the very latest. Okay, doesn't mean you can't see the high of the week form on Monday. It just means that a large percentage of the time you'll start to see the high forming for that particular week by Tuesday's London Open. Okay, and you can see that as the event here. Okay, and I promise you, if it's the first time you heard this, it sounds like a whole lot of hindsight mumbo jumbo. It's just too perfectly cherry picked. Go back over the chart yourself, guys. Don't take my word on it. Okay, study it. That's how you get better at this. Dig into it. Okay, when bullish market structures suggesting higher prices on the daily chart, look and see if the low of the week wasn't formed on Tuesday. Okay, and the times that it isn't, it's on Monday or Wednesday. And what does that mean? That means a whole lot, as we're going to discuss here. We see the high form for this week on Tuesday. Okay, and as price trades up to that point, it's coming off of this low here. Okay, so we have this low as a reference point. And it'd be nice if I kept that on the low before it was drug away. Let's put that back where it belongs. Okay, and what we're going to do is we're going to draw this all the way through the week. Okay, because this level is sensitive because it's a nice swing low going into a key level and trade it off. Even this little bounce in here is tradable, but we are focused on being what? A seller. Because of what? The premise is that we have seen price trade up to this 130.60 level on the daily chart, as we discussed earlier in this episode. As price trades down and it starts to have these bounces, we do not get all excited and frothing at the mouth thinking that, okay, now it's going to trade higher and we want to be a buyer. Okay? Think classic chart patterns. Does this not look like a bull flag? Okay, price rallies up, consolidates, and it's even doing what? Finding old support. See here? See the support? See the support? What do they teach us in the textbook? 3 points of contact confirms the support level, right? You don't think the dealers know that stuff? They know what you're going to do. They're going to hold price here, okay, and allow what? Orders to stack up. What kind of orders are going to stack up? Buy orders. Who's buying? Retail, the less informed traders, okay? Well, if they're buying it, who's providing the other side of the trade? The smart money. What? Yep, the smart money. They're selling it to them. Lock, stock, and barrel. Okay?
Hold up. So really quickly, right. So I wrote down homework, which is to look for where low English, for where the low or high of the week is formed, and count what and count. Okay, and create a folder that's on my PC, and perform this 100 times and then calculate percentage win rate. So essentially what I'm going to do is I'm going to do this breaking of the week, and if it is bullish or bearish, finding those patterns. And then when it does break in the 30%, have a look at it. And I'm going to try find why. I think once the problem is I've done this backtesting thing many times. The problem is I did it with lack of understanding. So it's like having a treasure map going to find the gold on the treasure map, but you've got it for the wrong country. The land you've got is not the correct land. So no matter how far you dig, how much you dig, where you dig, even if you got the correct measurements of the X and Y axis, if you don't really understand where you are or understand what you're looking for or where it is, you are going to not find it, even if the reason why you don't know is because you're in the wrong place or it's a lie or you got taught something that's different. If you don't get taught the truth or you don't understand the truth, you will fail. Anything not founded upon the truth will eventually fail. That's why lies will always come out. They may not come out during your lifetime, but they will come out at some point in time, 100%. And even if, excuse me, nobody in theory uncovers it, for those that believe in God, it's uncovered. So, what is my point? My point is this, that I would like to build my information on the truth or my strategy on the truth. In the past, I've done this backtesting thing where I've looked for patterns that repeat themselves. More specifically, I would look at the market and I would look for, okay, price, this was a turning point for price. What made price turn? Well, this is why. And because I was thinking in supply and resistance, support and resistance, supply and demand, it was through that check 1 2 1 2. It was through that I understood that I was wrong. Why? Because my results didn't line up. If what I found was the true X on the treasure map, I should have found gold, but I found silver. It would work sometimes, and other times wouldn't work. It was, I'll say, risk management up until this year, end of last year, was the only reason why I was somewhat profitable. If it wasn't for risk management, I don't think I could have become confident in my career skill set. Now it's different. It's no longer risk management that's saving me. It is knowledge and information. So now that if I back test with the new information I have access to now, I should be able to successfully find the X on the treasure map. And specifically what that means in relation to what I'm seeing would be, now when I'm looking for patterns, it should actually assist me in price action, because I'm no longer thinking in supply, demand, support, resistance in the retail way of thinking. I'm thinking of it in a smart money way of thinking. So instead of seeing support and resistance, I see liquidity. 1. 2, I see patterns that would assist in price action reading or tape reading. So it's not actually specifically me thinking about support and resistance as that's what moves price. No, it is the understanding that it is institutions that move price. That slight difference isn't all that matters, because I'm explaining the last point before I continue the video. The difference between believing retail moves price and the other side of it, where I believe that institutions move price. Well, if I believe retail moves price, that means every retail pattern is gold. Every retail pattern is consistent. Every retail pattern has a high success rate of being profitably accurate. So I will take that and look for those things, and that would be where wealth is found. That's the way of thinking in the belief system that retail traders move price. Whereas if you think institutions move price, you're going to start seeing more manipulation. You're going to start seeing why there's manipulation, the purpose behind the manipulation, how to spot it before it happens, how to spot it when it's happened or happening, and then what should follow manipulation. If somebody's going to manipulate somebody, they would have a purpose, whether it's money, position, power. Those are the main things, right? No one really manipulates someone for them to be happy, right? Manipulation doesn't make sense. Why would you want to manipulate somebody to be happy? Now, lying to them because there's a surprise birthday party is not the same as manipulation. Manipulation is the intent to confuzzle. Is confuzzle even a word? is like to cause confusion. Let me double check. Oh, it's informal word. What? Art and culture. I don't know if I want to be using a word that's yeah. Anyway, I meant cause confusion. Even where was I? I was explaining the difference between believing institution moves price and retail moves price. And then if you have the belief system that it's retail that moves price, then you have to have the understanding and accept that every retail idea is gold and where your wealth should lie. Whereas if you believe institution moves price, you'd understand that manipulation has a purpose. I remember where I was. If you were to manipulate something, there is a purpose behind the manipulation. You wouldn't manipulate somebody for good reasons. That's not manipulation. That is maybe acting or surprising or lying, simply put. But it's not manipulation. In fact, let's even get a definition of manipulation. I don't know why we're going on this route because what's this got to do with trading? But anyway, it's part of it. So manipulation is the act of controlling, influencing, or handling a person, situation, or object. It can refer to physical touch or skillful operation. Skillful operation. I like that. But is most commonly used to describe underhanded social or psychological tactics used to control others for, here we go, personal gain. That's my point. Personal gain. That is the purpose of manipulation, is to gain. But you're gaining it using underhanded tactics. What does that mean? That means presenting as one thing when whilst meaning another. That's underhanded. The opposite of underhanded would I would say be reputable. To be reputable, you have to be honor. There's some men that will not fight somebody with their back turned. They'll turn them, organize it. That's why boxers have organized fighting, and they settle their differences in the ring. They don't sneak a punch while they're not looking. That's dishonorable. That's manipulation, manipulative. That's underhanded, right? But the person that is honorable will tend to organize it, arrange it, or at least face them. Now, why do I say this? It's actually a book I was reading. It's called The Book of Five Rings. If you want to read it, it's quite interesting. I haven't finished it though, but it is quite interesting thus far. It's talking about the Japanese culture, how they utilize samurai, the life of a samurai in the world of business, and how their belief systems are birthed and the linkage between business and their culture. But that's not my point. My point is manipulation. Manipulation, there's a purpose, and the purpose is personal gain. So when you see when you see manipulation in the market, you have to look for the purpose, which is the personal gain. So that means somebody is manipulating so that they can gain, right? So when you see manipulation, if you can find manipulation, you can find a gain. A gain as in a, or rather get rid of a, gain is on its own. When you see manipulation, you should expect gain to follow. So when we can have a pattern, well, first we have to establish what manipulation is, right? Define it. Once you then spot it, what it looks like, you've defined it. What does it look like on the markets? How do you know it is? You need to have reasons for manipulation. Then once you've established manipulation and you found manipulation, after manipulation, you would see gain. Why do you see that happen? Because that's the purpose of manipulation. We're not the ones manipulating, we're following the manipulators because the manipulators are the richest people. Someone said that it's a quote that stuck with me that you cannot make a £1 billion or £1 trillion ethically. I don't agree, but I find it extremely interesting. And it essentially just means that at some point in that person's career, they would have had to do something underhanded, maybe throw a punch when somebody wasn't looking. And they may not see it as manipulative because to them, manipulative is more than a punch. It's a backstab. It's a acting. People have their own definitions of manipulation, but when you break it down, the core of the word, a lot of things that people would not deem as manipulation actually is manipulation. I'm not going to tell you what I saw your wife doing behind your back, because I want to gain your wife in my bed. That's manipulation. Even though you're not the one that's misbehaving, it's the wife that was cheating or moving sneakily or did something that is maybe on wife like behind her husband's back. But because you saw it and didn't report it, you have now become manipulative because you have a gain to gain from it. Whereas if you kept quiet to protect, it's not that you're no longer manipulating, but now what you're doing is maybe immoral. It's something else. But the point or the instant there is personal gain, there's a manipulation involved, and that's why you have to be careful, because sometimes we can have friends that do things that we don't like, but it's just their way of doing things rather than them doing something with the intent of harming you. That's not a friend. That's somebody that should be forgiven and forgotten, in my opinion. They would need to go in a process or sign themselves up to process, not just earning back your trust, but changing. Because a lot of people expect that when you break your trust, they need to earn it back. No, that's the last thing that needs to happen. The first thing that needs to happen is that you change. If what you did was genuinely wrong, why did you do it? What made you do it? What made you feel it's okay? Why did you do it to me? Would you have done it to anybody else? Why would you have done it to anybody else? Or why would you also do it to other people? Is it an internal reason? Where did it come from? Do you agree with it? When you think about it, would you like it to be done to you? Do you think that it's fair? Would you change what you did? Why would you not change it? Why did you change it? Why would you change it? And now, after all of those questions, do you want to continue doing it? Once that do you want to continue doing it is a no, the previous questions don't really matter as much. But that is to help you not answer the question, do you want to kill it, but to how do I kill it? Once you answer the previous questions, such as why did you do it, it will help you killing it, because you can't kill something you can't see. So you got to answer these quite tough questions. So I don't know why I'm going this deep into a very long or harsh tangent, harsh by the fact that it's not really explicitly related to what I'm really trying to learn. But it's very interesting. For me, art is this, right? There's so many ideas in my mind right now. Art, the reason why I see trading as an art is because the first thing it did for me was show me. Like there's points of my character I didn't think I had. I didn't think I was greedy. I didn't think I cared about what other people thought. But the market showed me I do. Right? How did they do that? It's a mirror. For example, greed. Once I started seeing numbers, I got greedy. So a lot of people say, "Oh, I would never do X, Y, Z for this amount of money. You couldn't pay me to do this." But I'm telling you, when you see the money in front of your eyes, you're a different person. And a person that has not seen themselves as that, you got to be careful. Because I promise you, once you start seeing certain numbers, you cannot help but change. It's not always a bad change, but you cannot help but change. And if you haven't defined how you would be before it happens, there's a lot of question marks. So it's a very dangerous game. So art is this. Art for me is something that tells a story at the basics of things. And it's a story that you receive well. Whether you receive it via the channel that it's received is a pleasurable channel, or the story that's being told is a pleasurable story. Stories can be told physically, like I can literally be talking to you and you use your mind to kind of visualize what I'm saying, or you're just hearing it and you're enjoying yourself because of, oh my gosh, what's happening or what's about to happen. Or you could literally watch a visual representation of what I'm saying. For example, picture books. That's where you start as a child. And the words are very few, the pictures are loud, and it's just helping you train your mind to associate images with words. Then as you grow up, the words become bigger, the pictures become smaller, and they almost become non-existent. Books don't really have pictures like that, so you'll start reading and there's no pictures. How can a book just have words put next to each other and all of a sudden it's the best-selling book in the world, aka Harry Potter, one of the most popular books in the world, and all it is a bunch of words. Yet, what is the beauty of it is that it tells a story, and people receive the story. Not everybody likes to read. That's why they turn it into a film. And the people that like the channel is movie watchers. They've watched bad movies or good movies, and they enjoy both. They enjoy the process of watching movies. I call them serial movie watchers, not because it's a bad thing, but because they enjoy the channel rather than always the experience. The channel is where you enjoy how rather than what. So I enjoy how you talk to me. You could be saying anything, but because of how your sound, that's why David Attenborough makes a lot of money. He could be talking about animals. Ain't nobody care about animals. Like obviously yes, but the animals is not what makes animals animals. It's the it's the channel of what the animals story was being sold in. The story of the animals was being channeled or sold through a story of a very soothing voice or a very eloquent sounding voice, and of course there was visual representation. There wasn't many words to read. You know how many look at how many books sell about animals, and look at how many viewers you have watching documentaries. People that don't care about animals will watch the documentary. That's my point. So a lot of people accept the channel rather than the content or the what. They appreciate the how rather than the what. That is art. Art is the transfer of a thing through a what and a how. That's the most basic explanation I can give. The transfer of a thing in, and I call the thing story. The transfer of a story or a thing through a what and a how. The how is the channel. The channel could be via words, it could be via pictures, it could be via words written down on a piece of paper, it could be a painting, anything, a screen, anything, visual, audible, usually your five senses. It can even be by touch and taste. It's a transfer. Transfer is key. It needs to be from point A to point B. So it's not always going to be a vehicle, but it could be metaphorically a vehicle, right? So that's the transfer. It would just art being on scene is not art. That's hidden art. It's not art. Art has to be seen. It has to be a transfer for art to exist. Then the how, no, so the what is the story is the thing. It has to have some content. If something is empty, it's not a story. It cannot be transferred. You can't give somebody nothing. It doesn't make sense. Obviously, it's a mathematical debate in itself, the number zero. But the concept in theory is that zero cannot be transferred. You cannot transfer, go to your bank app and try to send me £0. It doesn't work. You can't quantify it. It's a theory rather than it is a quantifiable thing. So what is the point of what I've just said? Art has to have some value. It has to have something. It could be 1 penny. It could have the most negligible of value, right? But it has to have something. You cannot transfer nothing, so you have to transfer something. So the value, the story must have something. It must have a point to say. It has to have words. I'm streaming right now, right? People may just enjoy streams because it makes them feel a certain way. Maybe I like watching some streamers because they are people I would get along with in real life, but I don't have access to have that relationship with them. So the stream is almost like me having a relationship with somebody that I don't actually have a relationship with them. A relationship, I mean friendship, right? So a lot of times, for example, I was watching a person called Jinxie. I think he's very smart in the way he thinks, logical thinker. He's also some similarities between him and myself, but he's also very kind-hearted. That's one of the things I really appreciate about him. I don't know how much he believes in God. I think he does. I'm not certain though. But for me, what I like about him is he's very kind-hearted. I've seen him being like misused a lot of the time. I think a lot of his fans have seen it too. But I watch his streams for him more than what he's doing. And a lot of people do that because he goes, plays a game, it revives it. If he's playing a game, that game will increase in popularity. It's just a fact. That's who he is. And he's doing it because of who he is, not because of how good he is at the game. Some games he's terrible at. I'm better than him at most of the games he plays, yet he still pulls more numbers. So art, we've established, is a what and how. It's a transfer of a what and how. You have to have a value of a thing because you cannot transfer nothing. It also has to be via a channel. So art is a transfer transfer. It's actually interesting that art is a transfer from the art itself to a person, but to establish art is actually the other way around. To create art, you have to transfer from the person into a channel. So you pour yourself into something, whether it's you putting your mind to pick up a pen and write down some words to create a story on a piece of, or also known as a book, or it could be your mind processing information to then put it into words to speak, as I'm doing for the past almost 2 hours, partially of it because I'm watching a video. Then you also have value being added, because in my thought process, my mind working together or working itself is producing the words out of my mouth. So that production process is where the value is birthed from. And then I need to be exposing it to other people, which is why I'm publicly streaming. So that's the process of art, and anything can be art in that way of thinking. Let's actually look at what the definition of art is, and I'll get to why I'm talking about art in a second. Okay, so I was right about the senses. I talked about emotions. I didn't really talk about intellect as much. Visual creations, yeah, most commonly, but it broadly encompasses pretty much anything. So the root of it is a specialized skill or craft. Specialized. Now it's abstract, basically mean not as popular, but we make it popular because of how woke we are. It's my definition of abstract. Performing arts. It's just acting, mate. Engaging in the humans. How can you make someone feel something from dancing? It's so weird in theory, but it makes sense in actuality. I'll be so real. This is the most simple image. I don't even like this as a painting. Why is it so popular? The Mona Lisa. That's insane. In fact, let me just quickly, just last sidetracked on what. Why is the Mona Lisa so popular? Okay, see, it's the story. I'm telling you, art is story. If you break it down, the story. I call it a thing because it could be more than a story, but the thing is, and story of this is basically a story. Because think about it, look, it wasn't even that globally known. It was respected, but not widely known. But the heist is a story, and that story sold more than the actual image itself. See, the image isn't that impressive. I mean, it's good, sure. It's a woman at the time. It's fairly realistic. This, that, the third. But the fact that it was painted by Leonardo da Vinci, first of all, he has a very cool sounding name. Second of all, it was painted earlier than the technology we have now. So that, I guess, my generation could respect it for those reasons. Then you have the story behind it being stolen, emphasizing its general appeal. So when you have all these factors, it's the story that really makes a thing run. Story, and I would say stories is human nature. That's why gossip is so popular, and why blogs will never ever run our business, because human nature, any business that's funded upon human nature is destined to succeed. That's why the industry of I don't know if I can say that word of now YouTube triggering it. Uh what's the way of saying it? Okay, yes, adult films, they will never, or adult actresses and actors, right? They will always be in business because it is based on human nature. They can put as many censors as 18 plus, 21 plus. Adults only, they can say you can block it in these countries. People will always find a way, number one, but number two, will always be in business because it's human nature. And it's a business based on human nature. People will always be hungry. That's why restaurants can open shop. People will always be thirsty. That's why water will always be. People will always get cold and warm. That's why energy companies will. People always sleep. That's why bed makers will always. When you find human nature is just more than a human proclivity in terms of behavior. It's also human necessity, right? When you put those two things together and you find your business on such, it will always succeed. The difficulty no longer becomes on your market or the potential buyers. It's now your competitors. That's the only difference you would have. But once you base your business on the market, even traders will always be in. I'm in a market of such. I think there's 15 million traders worldwide. That's a market that will always be seen. Why? Because people by nature want to get rich quick. It's a human nature. So that's why people can package their content in a way that seems like it works, and people will buy it because of their nature, the hope. But anyway, the reason why I mentioned art is because for me, this is art. It's art. Why? Because it's telling a story. You never know what story it's telling, but you can become educated. When you educate yourself, you then are able to read. It's like a book. If you cannot read the language, if you give me a book in Spanish, I will not be able to read it to you because it's in a language I do not understand. You put in English, I could potentially read most of the words to you. I don't know all of the words in the English language, but for the most part, I know all the basics. So what does that mean? That means I can receive a story in my language. This is a language. Everything's a language. This is a language. But if I don't understand the language, I don't understand what this means. And it's more than just it opened here, closed here, wicked up here, wicked there. What does the size mean in relation to each other? You know, it's like Chinese Mandarin. Chinese is a language. It's just there's different dialects. Mandarin, for example, they look like symbols. Is it Japanese? Yeah, Japanese as well. They have like symbolic language, not Japanese actually. Symbolic language, and that symbolic language, you'll notice that there's similar shapes. I call them shapes because I don't know what else to call them, but they're similar shapes, but they mean different things. So it's sometimes in relation to each other that it changes everything. When you add another stroke here, it changes the sound or completely. Similar to this. This on its own means nothing, but next to this and this, it means something. There's a gap here. 3 candlesticks. Christopher Valley. There's a gap here, gap here. You know? So this mark is a language and it's portraying a story, but you cannot read the story until you learn the language. If you learn the wrong language and you apply it to the markets, but the markets is talking and you're perceiving, there's going to be a barrier. When you're out of sync in language, you will not be able to receive a story. If I'm talking to you in English, but you only understand Spanish, you're not going to understand my story. So that's the first act of business, is to understand the story of the market, which is to understand the language of the market. Language. How do you understand the language of the market? You study the language. You find out what it means. Facts. Start with facts. NZD/JPY is a fact. Daily time frame is a fact. Candle, open, close, wick is a fact. Price, time is a fact. Start with the facts. Anything that's theory, like, oh, and price does this pattern, it means no. That's a story, or that's a story rather than a language. Story is when you put together language. If you break down the story, it's a language. So you learn the language itself, and then the story will make sense after. So don't listen to people that are saying if the market makes this pattern, it will make you money. No. They're telling you a story. You don't know if the story is real or not until you. The best way to know if someone's lying is to understand their language. Someone could tell me something in Spanish, I will not know if they're lying or not. Think about it. If someone is telling me something in Spanish or Japanese or French, I cannot tell if they're lying or not. No matter how much good I am at body reading. If they don't speak my language, I won't be able to tell. But once you start learning language, you can then start learning if they're lying or not. So if they imagine they're saying to you, oh, I'm the richest person in the world in Spain, how can I call them a liar if I don't know what they're saying? But the moment I learn their language, I'm like, oh, you think you're richer than Elon Musk? Well, I don't see you on the Forbes list. That's probably not true. Not necessarily that it means they are lying, but I can now have the perception of this depicting if they're lying or not. So the market is a language. It's an art. It's just telling a story. And to learn the story of the market, you need to break down the language. To break down language, you need to start with the facts. And you need to look and listen to people who are talking only about the facts. The moment that they step into theory or story, you then leave it alone until you're comfortable in the language. The language means that you can read it to an extent on your own. And then the theory, you then learn that. It's kind of like the process of school. You learn what numbers mean. You learn what does, minus does. You learn what words mean before you start writing an exam, before you start answering a theoretical question, before you start doing calculations. You learn the language first. And that's what you do in every subject. It's not just English language or literature we do in the UK. We study language of arithmetic, science, biology, chemistry, formulas. They all have their own different kind of way of speaking. So language is not prone only to English or literature, but it's also expanded to, as you've seen the definition of art change over time, to visual representations. So you can learn the language of a visual representation. Once you learn the language of a visual representation, you can then start to read and receive stories. Stories are good if they're a good story. Remember, there's a purpose. There's a purpose in the story, and there's also a purpose in manipulation. So manipulation, for me, the basics of manipulation in a market like this is anomalies, not abnormal movements, such as this wick gap here. When price pushed up, it's manipulation. You can see continued. When it came back to this area of manipulation, price reacted to it. Just the basics. Basics. Okay, so we're going to get to the hour mark, and then I might most likely will watch the other 30 minutes off stream, and then we'll tomorrow pick up from volume 3. I will live trade tomorrow. I didn't want to trade today because it's bank holiday, but I did keep my eye on a couple of things. Just wanted to see what price would do. I thought price would come up. Didn't come up here. Didn't come up here, or anywhere pretty much. So I didn't get any opportunities, but it's fine. I wasn't looking for it anyway because, like I said, price was moving weird as it was bank holiday. Interestingly, now I'm speaking out loud, we can utilize the theory. I think if we try to do the homework tonight, which is to go through 100 examples of a weekly move and seeing whether, if it's a bullish environment, where the low was created, if it's a bearish environment, when the high was created, to see if it was made during the first 2 days of trading, another trading week being Tuesday, London session open. And if not, he said latest Wednesday London session. And then we can find 100 examples, create a percentage, and then if it's a decent displacement away from 50%, we can start researching it further, maybe get to 1,000. But I want to actually do it where I record it, screenshot all of that, and record it for 100 different times on my computer. So that will be done hopefully by tomorrow. And then the second example being the second homework being the remaining 30 minutes of the video and written down on a piece of paper. So I want to aim to start studying for 5 hours a day, just on anything. Specifically, I want to give 5 hours to trading and 5 hours to Bible study in a day. It's very difficult because that's 10 hours. So we've done about 2 hours so far. A lot of it was me speaking out loud and just kind of theorizing, putting together some words. But 5 hours of study a day, I think is a good time. The reason why I did that is actually biblically. I got it from, I think it was Acts 19. They were studying from 10 to 3, they said, which is 5 hours. And they did that daily for years. Here we go. Acts 19:9. But when some became more and more stubborn, hardened and unbelieving, discrediting and reviling and speaking evil of the way of the Lord before the congregation, he separated himself from them, taking the disciples with him. This is Paul separated from a certain place, and went on holding daily discussions, daily, in the lecture room of Tyrannus from about 10 o'clock till 3. I don't know where I got years from, but it was daily from 10 to 3, 5 hours. Oh, there we go. This continued for 2 years. So Acts 19:9-10, that's where I got the 5 hours of study from, if you wanted to know why. I'm reading this, and the scriptural reference is 15, because Jesus I know and Paul I know about. Jesus I know is ginosko, which is to know by intimacy, and then Paul I know about is episteme, which is close proximity, familiarity, close observation, factual knowledge. So the two different nodes. It was a very subtle difference, but caught my attention. Anyway, those are. Oh, by the way, wisdom. Wisdom is something I pray for daily. It's something I get from the Bible. If you think I'm wise, start reading the Bible, because that's where I get my wisdom from. And you would see I'm not as vocal in terms of I make it a point to speak about it all the time, but I am very confident in my in my God, and I am religious by the standard of things. I'm a Christian. I believe in God. I believe in Jesus Christ as my Lord and Savior. So a lot of the times you'll see me referencing scriptures. You'll see me referencing a lot of biblical principles. That's one thing I will always emphasize on: biblical principles. If there's a biblical principle and I believe it is a biblical principle, I will most definitely exercise it to the best of my ability, because that is something I believe in and it's worked for me thus far. I don't see it stop working for me. So I'm just wrapping up the video now. I probably will just I'm just gonna end it here. We've talked a bit. I think to go back to the video will be a bit too long of a break, so we'll continue this off stream, and then we'll return on stream for episode 3 latest tomorrow. And then I want to get this done by Friday, so I don't know how much I'll do on and off stream, but to get it done and written down in a notebook would be good. So get this done by this week, and then we can move on to another playlist. It's me and boy CJ and I'll catch you guys tomorrow. 2-hour stream complete today. Finally, we did a longer stream. Short streams mainly last week and the week before, because we were just doing trades, but we didn't see much, and the ones we saw didn't really go in our way, so we got some things wrong. So that's why we're studying still. Nevertheless, we never stop studying. It's been your boy CJ and I'll catch you guys tomorrow. Day 116 for 5 complete year.